Good evening. It's Kelson from the AM Click. You can check me out every weekday morning, 6 a.m. to 10 a.m. And I'm super excited about tonight, our next Building Black Wealth series. But I'm not here alone. I got my sister, Miss Persia, Nicole. She's on here with me as well.
Absolutely. Supports right after the AM Click. I'm around these parts 10 a.m. to 3 p.m. getting you through your midday. And, both Kelson and I, when it comes to home ownership, we both have done it. You know what I'm saying? We're both in process of getting more properties. So this is a really exciting time because not only do we have properties, we want to gain more properties, Of
course. And we're going to start things off by saying a special thank you to our sponsors for tonight. We have the Merlin Department of Housing and Community Development and also APGFCU, who's going to help make this thing happen tonight.
Let's bring on in our experts because although we've done it, we're not experts. So first up, let's get started with Latisha Whitworth from APGFCU. Hey, Latisha.
Hello. Say thank you for having me. My name is Latisha Whitworth. I work with Aberdeen Proving Ground Federal Credit Union, or APGFCU, and I'm a mortgage consultant there. I've been there for 12 years, and I made the switch from a bank to a credit union because I believe in the philosophy of people helping people and making sure that we help our members achieve their financial wellness.
Okay. Right. One of our next panelists is a good friend of ours, Mr. Craig Powell Jr.
Good evening, everyone. I'm Craig Powell. I am a licensed Merlin real estate agent and also team lead with the Next Step Realty team, the Craig Powell team of Next Step Realty. I've been in business for coming up on 8 years, and I am, really excited about being able to make a huge impact in our community, especially in Baltimore through real estate.
I know that's right. We're buying up properties around here, Craig. Next up, part of the squad is Brittny Holden from the Maryland Department of Housing. Hey, Brittny.
Hi, everyone. Again, I'm Brittny Holden. I'm a community engagement liaison for the Maryland Department of Housing and Community Development. Whew, that's long. We are a state agency that manages many home ownership, affordable rental housing, and neighborhood revitalization programs across the state.
So I think we should just jump right into it because if you've been paying attention to the news and everything, they're saying interest rates are going up. Don't buy a house. In the other place you see, do buy a house. I guess the first question, when is the best time to buy a house?
Right, at this point. Craig, what about you?
Yeah, I'll take that one. So I always say it's always a good time to buy a house. I know that obviously, like Kelson was just mentioning, interest rates are on the rise, and when you really think about it, I mean, a lot of us that haven't, stepped into home ownership, we're renting, and a lot of your hard-earned money, you're actually investing in someone else and making them rich. So the sooner you can start investing in your own future, creating a legacy for yourself through real estate, which I always say is the number one thing to invest in, because the land that we have here is all we're going to get. We can't create more, and it's going to constantly, keep appreciating over and over. So I always say the right time to buy is always now.
Okay. I'm nervous sometimes,
Right.
I say that, but then, but I know we're going to get more as to why it is the right time to buy right now. But, as a homeowner, I know some benefits of buying a home, but I also know some people who say, why buy a home? You don't really even own it. The bank owns it. You're paying the same as rent. Why do you feel like, Latisha, you should buy a home? Why is it important to be a home owner?
It's important because you're building equity and wealth, like Craig says. If you are purchasing a home and as you pay it off, you have equity. So you can always use that to purchase cars, get out of debt. You can use that to purchase other homes as well. And it's stable. You don't have to worry about somebody increasing your rent if you're renting. And there's tax incentives too for home ownership as opposed to rental.
So Brittany, my next question is for you. What is the Merlin mortgage program?
Oh, wow. So the Maryland Mortgage Program, it's a program that we have that helps home buyers in Maryland achieve your dream home ownership through a range of programs. This program provides 30-year fixed rate home loans to eligible home buyers purchasing in Maryland. And so with these programs, they make purchasing and owning a home more affordable.
Okay. So let's say I've never bought a home, but I know I want to buy a home. Can we go through the process and the steps it takes to become a homeowner?
Yes. So there's two different things. If you want to get pre-qualified, that's when you actually will reach out to a lender like myself. And that's when we can go over like your credit history, your debt to income ratio. And normally you want to start looking into that like maybe a year or so beforehand, because if there's some things that you need to correct, then you'll have time to do so. And then once you're actually ready to pull your credit, then that's when we can actually get you pre-approved for a mortgage. And then that's when we can let you know exactly how much you qualify for, because we're verifying your income and your assets and everything like that.
I'm happy you mentioned credit, because I think it's a lot of things that people struggle with. But when it comes to credit, especially in our Black community, that's a struggle, right?
Mm-hmm.
So what is an ideal credit score when buying a home? What is that score that banks look for to say, you know what, that's going to get you a home? You know what, that's going to get you a seat. So let's talk about that.
Well, the minimum credit score you have to have is at least a 620 for some of the programs that we offer. But the only thing is, the closer you are to 620, then the higher the rate may be, as well as you might have to have a little bit more in down payment as well. But if you wanted to get like the lowest rates, then you want to shoot for like that 740 credit score.
So if I wanted to buy a home, let's say I get pre-qualified for, let's say 250, right?
Mm-hmm.
But I see a house that's maybe like 350. How do I, get the difference between that? Or is it possible?
Possible. I mean, if you wanted to, let's say if you had a lot more assets and you didn't want to put as much down initially, but then now you found this home that you love, then we can try to see if you put more down, then we can get you approved. But if not, then, we're not going to try to have you, or at least the credit union is not going to try to have you purchase a home that you're not eligible for. Because, we want to make sure that not only that you have the funds to purchase the home, but then that you keep it as well.
Okay. And so once I get pre-qualified, what happens next?
So then we'll give you a pre-approval letter, and then your loan or your pre-approval will be good for 90 days. And that's when you'll reach out to a realtor, and then that's when they'll take you around to start looking for homes and everything like that. And you actually can't lock the rates or anything like that until you have a signed contract.
How long does the rates lock in for? Is it 30 days?
Well, once you actually have a signed contract, it all depends on your contract settlement date. So you can lock it as long as 90 days, but then the rates might be a little bit higher because you're locking it for a longer term as opposed to like a shorter term.
Okay. Craig, I know your clients all the time probably ask you all these questions. You're like, all right, here goes the list. I know you're going to ask me all these different things, but what is like the most asked question when it comes to someone buying a home, Craig, for you?
I would say the most asked question that I typically get is a lot of it is really on the lending side, like how much house can I really afford? Is this price going to have this mortgage payment ever going to change on me? Because most people that are buying a house for the very first time, they're renting somewhere, and year over year the rent goes up. So the most common question I get is this payment going to change? And then aside from that, it's going to be, is this a good house to buy? Because a lot of people are buying resales and they want to make sure that the purchase, because they're most likely investing in the largest asset they'll probably ever make in life. So a lot of times they do ask me, is this a good purchase that I'm making?
And then you give them what's like a good response to that, because people are, wondering right now, is this a good time to purchase? Is this even a great home? Like, what would you say to that?
Yeah, that's a good question. So, essentially we look at a couple different things. So obviously we're going to look at the current market and where they're looking to buy. We look at the comps in the area to make sure that what we're going to offer on the house, that they're actually going to get a fairly decent deal on it. One thing I always recommend all my clients to do, especially on a resale and even on new construction, is to get a home inspection, because you need to know what you're buying. Same way if you wouldn't buy a used car without having somebody, your Uncle Joe or someone that knows a little bit about cars, that come and look at it, you want to hire a home inspector that's licensed to look at the house from the foundation all the way up to the roof. That way you know what you're buying. Now, obviously, when it comes to home inspections, it's just a visual inspection. So once you get in, there could sometimes, be things that come up that the inspector may not have been able to catch. But I will say definitely make sure you get a home inspection where you know what you're buying, and then we'll really sit down at the table and make sure that it's a good investment that's going to build you some equity over time.
Brittany, does MDH have any programs for first-time buyers?
Yeah, so we have a extensive product line, but what makes the Maryland Mortgage Program unique? We have a range of, associated financial incentives and other assistance. And with that can mean a difference between being able to purchase and continuing to rent.
Okay. And wherever you're watching it right now, you can chime in, like ask questions, as Kelson is asking questions, on a Facebook page, on YouTube, wherever it is, and we'll get it answered by the experts of the night. Would you suggest doing a home equity loan? Because people who are actually are already a home right now, and they want to figure out, okay, I have this amount of equity in my house right now, I want to use it for upgrades and things like that. Would that be something that you would suggest? Latisha, you could start.
Definitely, because with the home equity loans, the rates are a whole lot lower than if you were to do like a personal unsecured loan. because, and with the home equity loans, usually I know for us, for unsecured loans, the maximum term you can go up to is 7 years. And the maximum loan amount you can have unsecured with the credit union is $50,000. Whereas home equity loans, you can go as high as you want as long as you have enough equity. And for our fix, we can go up to 95% of the value of your home. And the longest term you can do is 20 years. So sometimes if people want to consolidate their debt or do home improvements, then you can just apply for a home equity loan, tap into the equity of your house, and then we'll give you the funds.
I like that. Give me the funds, honey.
Yeah, Craig, I got a question for you because a lot of folks are trying to buy a home and may not be familiar with some of the terms that realtors and everything use. What's the buyer's market versus the seller's market? Can you break down the difference?
Yeah, that's a really good question. So the difference between a buyer's and seller's market, it really just depends on supply and demand. So as you guys know, in the last 2 years, due to COVID, which one thing we thought was a little shocking is that the housing market went through the roof, right? Prices increased. A lot of people were out there trying to buy, but inventory was really low. So it was less inventory to really meet the demand from buyers. So since the buyers' demand was so high and it wasn't a lot of inventory, that really drove prices up, and sellers had really an advantage in the market. So that's what we consider a seller's market. On the flip side is when the demand doesn't really necessarily meet the inventory. So there's a ton of houses on the market, but not enough buyers. And that's when it's a buyer's market, because buyers then can take advantage of it because there's so many houses out there, you can really get a good deal.
Mm-hmm. And Latisha and Brittany, with the different programs that you have, when the pandemic did hit, how was your jobs? Were they still very active, people buying less or trying to, get approved for more money and buying homes? I guess the amount of people coming in to get loans and stuff.
Well, Latisha, I don't know if you want to answer that. I have an answer more so for homeowners that kind of, due to the pandemic, struggled with their mortgage.
Okay. Yeah, so we did have a lot more people applying for mortgages because the rates were so low when the pandemic initially happened. So that was the best time to refinance your mortgage because the rates were really low. Now we're not getting as many people, but we're getting more like home equity loan requests because, those rates are still kind of low compared to the unsecured debt and everything like that. But there's still people out there looking for homes. But like Craig said, it's a seller's market. So you might have those who are initially, like in COVID, people can say, well, I want to sell a credit to help with some of the closing costs. But now sellers, since they know that there's not that much inventory out there, they're not really willing to help you. But we do offer programs for down payment assistance, and we are an approved lender with the MMP program too. So there are loans and programs out there to help you with down payment and closing costs.
Okay. All right. So let's see. We have a question down here. I was going to ask this. Who is that? You were all in my mind. Rent-to-own opportunity is more efficient than taking out a loan and buying into today's market with the price increase in the economy. Because like rent-to-own, a lot of people want to do that because maybe they're not all the way ready to jump out there yet. So what would you say to that? I think everybody can speak. You want to start first, Latisha, and we can go down to Brittany and Craig?
Mm-hmm. Rent-to-own opportunities are good. You just have to make sure as well that a portion of your rental payment is going into an account by the landlord where they're going to be using it to help you with the down payment and closing costs once you're ready to purchase the home.
All right, Brittany, what would you say?
And I would agree with Latisha. Again, where I don't work primarily directly with mortgages and home ownership, I do go across the programs throughout the state with many homeowners, but I would agree with Latisha on that.
Yeah, and I would say as far as rent to own is concerned, definitely make sure you read the fine print, because I've run into clients that have been renting from a particular property from a landlord or through a company that promised they were going to sell it to them, but then as the market started to shift, they decided to either keep it as a rental property long term, or even sell it to someone else that was willing to pay a little bit more for them. So I would say definitely, like Latisha was saying, if they're going to be doing a rent to own, make sure that a portion of your rent is going to be going towards a down payment or some sort of closing costs. And also, just be cautious that that seller or that landlord may not necessarily be obligated to sell it to you. So you may be in a position where you may have to go back out there and just shop as a traditional buyer in the market.
Yeah, and then sometimes you're paying way more than even owning or renting. Like you're in that mark was kind of like, what am I doing? Right?
Exactly.
And another option is you can always keep paying your rent and just do the difference into a savings account. So that way you kind of get used to making the mortgage payment. And then once you're ready to actually apply to purchase a home, then you already have your down payment already saved.
That's very smart. When you're looking for a realtor, what are some things you should look for in a realtor that best fits you?
Yeah, it's a good question. So the first question I would ask when you're looking for a realtor is their availability. One, are they a part-time agent or are they full-time? Because that's going to be important to make sure they're going to be available for you around the clock. I mean, every particular person that work a different shift. You may be someone that works night shifts, so having someone that's going to be available early morning for you may be beneficial. So I would say definitely start off by asking if they're full-time or part-time. Another question I would ask is, what does their support staff look like? Do they work independently? Do they have an administrative team that's going to support them as well as you in the process? Because the more people that they have that's supporting them, the more efficient the process will be for you. Another question I would ask is if they have any knowledge of the communities that you are interested in buying in. As we all know, especially around Baltimore, there's been a lot of development happening. So having someone that's knowledgeable about the communities that you're looking to buy in is going to be very important. And I will also say, how connected are they? Because we all know that we like to work with people that we know, love, and trust. So when you're selecting a realtor, you obviously want to pick someone that's trustworthy, but are they connected with other real estate agents? That's going to really help you out when you are submitting offers, because agents want to work with other agents that they know, love, and trust as well.
I think we had a question at the bottom from Lindley. They were talking about the grant options over the Maryland Department of Housing. Yeah, they're grant programs to help first-time home buyers. You want to talk about that, Brittany?
Sure, yes. So for our products, we don't have any grants on our product line. We do, if you are a state employee, we do have incentives with that called the Smart Keys for Employees program. But if you aren't, then no, we don't offer any grants.
Brittany, another question for you. What is the Maryland Homeowner Assistance Fund Program?
So the Maryland Homeowner Assistance Fund Program, another long name, this is a response to Maryland homeowners falling behind on their mortgages and other housing costs during the COVID-19 pandemic. With this program, it does provide support to struggling families and helps them to avoid delinquency, foreclosure, as well as mitigate the compound impact that it's had on their families and communities. The program, it not only focuses on mortgage delinquency, but it also is designed to assist with critical home repairs, and it principally targets the low to moderate income homeowners.
Okay. Can we get into this Airbnb vibe? I mean, everybody wants to buy homes to make more money on top of the homes. Would you recommend this? I've heard lots of mixed views. There's lots of properties right now, of course, that people would love to buy, but the interest rates, would you recommend getting a property and to rent it out as an Airbnb? Craig, what would you say?
I think that's something that, everyone individually would have to, evaluate their own personal circumstances and their finances. When it comes to buying, I mean, obviously, when you're purchasing an investment property, there's a little bit more money that you have to put down. If you're buying it as an investment, sometimes the interest rate could be a little bit more, but you really want to look at the return on the value. So depending on where the property is going to be, look at, some comparables to see what you could get for, Airbnb rental, or even if you just want to do a traditional rental, looking to see what you can actually make in profit on a monthly basis if it really makes sense.
Yeah, we're trying to build more Black wealth around here. Okay, we want a property, another property, and then their money over here. We want all of that.
So can we
just piggyback on the grant funds? We do offer grant fund programs too through FHLB of Atlanta. Most grant funds are income based, so it all depends on how many people are in your household. Even if you're applying for a house by yourself, but if you have like 2 or 3 other adults moving in with you, we still have to include their income as part of the household income as well. So there are grant funds to help you with down payment and closing cost assistance.
So as we're talking about these closing costs and down payments, can we talk specifically what they are and what determines how much, the closing costs or the down payment is?
Normally, if you are a first-time home buyer, so that means that you have not owned any properties within the last 3 years, the minimum down payment requirement is 3% of your purchase price. So if you are looking to purchase a home for $200,000, then your down payment would be $6,000, and then your closing costs can range anywhere between 3 to 5% of the purchase price as well. So you're looking at another $6,000 to $8,000 or so on top of that for your closing costs.
Okay, let's pull up the other question that was up here as well. Glenada. Hey, Glenada. Does the Maryland Department of Housing have any programs available to help people who are currently homeowners stay in their homes? Because that's a big one right there. That's, we want to make sure we do that.
Yes. So again, the Maryland Homeowner Assistance Fund is for that. That is, like I said, not only for homeowners dealing with mortgage delinquencies, but if they need critical home repairs. So in order to receive assistance for the mortgage payments, you must be delinquent for 3 months. But they also help with mobile home loan payments, property taxes, land lease and ground rent delinquencies, HOA and condo association and insurance fees, water, sewer. As far as when it comes to repairs, they can help repairs such as mold, asbestos removal, no heat or air, electrical, plumbing, or septic repairs. So it helps with a lot.
Everything.
Yes. All of that. Any worries we have, we're going to make sure we get that covered. Hey, Latisha, quick question. Oh, actually, I'll go back to Brooklyn's question. Hey, Brooklyn, what is the minimum credit score to be able to purchase a home? Yeah, we kind of talked about this earlier. We can go back to that. I think it was
620 is like the minimum for conventional financing. You do have you have lenders who can, if you're doing FHA financing, they may go lower to 500. Yeah, brokers too. And the difference between brokers as well as like lenders is that brokers, they shop kind of like if you're purchasing a car from a dealership and they shop your credit around. That's how brokers do too. So they might have different lenders with different credit score requirements.
Okay. I know a lot of people say the three most important things to buy a home is location, location, location. For me, it is because of school districts and things like that. But what do you think is the three most important things to buy in a home? Craig, what would you say?
Three most important things I would say is definitely location, because you want to make sure that you're in a location that you're going to be comfortable with long-term, because purchasing a house typically is a long-term investment for most people. Outside of that, you want to make sure that I always tell my clients, try to get somewhere between 70 to 80% of the things on your must-have list. And I normally say focus on structural things because those are the things that will either cost the most money to add on or things that you simply can't add on to a house. So I would say that's the second most important thing. And third, I would say, make sure that you're purchasing, and this kind of goes with location, that you're purchasing somewhere where value could potentially increase for you over time. You're buying into a development that may, be adding in some more infrastructure around you that can kind of increase price points. You're in a good school district, things like that.
And I kind of have two questions, one for Latisha and the one for Craig as well. So when you're trying to buy a home, is it better to buy new construction or a home that's already built? And is it easier to get a loan for home that's already, established and built versus a new construction?
I can start on that. So I would say it really depends on personal preference. I wouldn't necessarily sway someone to new construction over buying a resale. However, I will say with new construction, it is pretty sweet to be able to see the process from, we all say in the Black community, building from the ground up. It is actually, really sweet to be able to see that entire process, being able to pick your options and things like that. And one good thing that most new builders do give you is warranties on like the structure, also some of the mechanics and the inside of the house. So that does give a lot of people a little bit of a peace of mind. However, I will say in the resale market, you can still get a really great home. I mean, you have homeowners that have taken really good care of their product over time. And typically you can normally get a little bit more house and land on a resale versus a new construction. Now, other thing I would add in there that I tell all of my clients as well is that there are some programs out there that give you a little bit of peace of mind when you are buying. Because I think a lot of people, they shy away from buying because when you're renting, you can call a landlord when things break. Hot water heater starts leaking, you can call them and they replace it. But when you become a homeowner, that's something that you have to actually replace on your own. You got to have the cash to do it. So there are programs out there that kind of help you out with that as well when you become a homeowner. So don't be afraid of, buying a resale when things may not necessarily be brand new. There are home warranties that you can invest into that can replace some of those things and alleviate some of the costs for you.
And then the main thing for the lending side is for new construction, since, it might be 6 to 12 months down the road for the house to be built, you wouldn't be able to lock in the rates until you get a little bit closer. But really, it all depends on, is pretty much the same, whether you're building a new construction or a home that's already been built.
Mm-hmm. And before we move on from that question, really quick, with new construction, I would say just because it's brand new doesn't mean it's perfect. I mean, we all make mistakes. We're all human. So when they build those new construction homes, you know, there's still potentially where things could go wrong. I mean, I've seen some new builds where, you know, there's a plumbing issue or a sewage backup because it's something that man has built. So things could still go wrong in a new construction as well.
And I remember for me, when I did had a new build, it was like, it had took like a year to settle. There's still some like different cracks in the wall and, you know, little pops and everything. So that's very important to look at as well.
I hate those wall pops.
Yeah.
Hey, like, where you come from? God,
Yeah.
I paint.
Deanna,
right.
the question. You want me to do a Persia?
Go ahead, yeah.
Deanna, she said, what's the current interest rate and do you think the rates will continue to increase or decrease?
Right now, the current interest rates for 30 years, are you looking at about 5.65%? It all depends on the market, but the federal funds are going to be increasing it a few more times this year. So we're not really looking to have the rates go down. But now we do have a lot more people who are interested in adjustable rate mortgages, because I know initially people were scared from those because when the first housing fell through, it was a lot of predatory lending out there. But now with adjustable rate mortgages, you can get it as low as 4.375%. And with us, the longest you can have the rate fixed is for the first 7 years. And then so that way it gives you time to see what the rates are, and you can always refinance it later if the rates go down.
Okay. I think we have another question as well. Oh, okay. So there is land, empty property throughout. Are there programs to help in the purchase of land to build a home? There is a whole lot of land. I'm thinking about these trees in my backyard. It's a whole lot of space. So can we get her question answered? I don't know, Latisha, you want to take this? Or
there are quite a few ways to do it. If you're looking to purchase just the land now, we do offer lot loans, but the guidelines for those are totally different. So the minimum down payment that you have to have is like 25% because it is an investment. And then our lot loans are set up with the intention on building within the first 5 years. So what will happen is once you purchase the land, and then now you have to find a builder to build the home and everything like that, they'll usually do like a construction to permanent loan where they'll pay off the land and then they'll give you draws to build a house the way that you want to.
Okay. I think we have another question. Lindley, what are the steps in the mortgage process, pre-approval to closing? Yeah, I feel like that's like the biggest thing right there. You get pre-approved and you're like, yes, but then the closing process. So let's talk about those steps as well. Well, you're mute. And you look like you were.
I'm sorry. Here we go.
Also,
it's the most invasive because they're checking your bank accounts.
Why you can't make a move?
I hate it.
Child, you can't buy a donut without them being like, wait a minute, you don't normally buy donuts. What's happening here?
Exactly. But no, so once you get pre-approved, so that's when you actually have your credit pulled. We give you the pre-approval letter, and then you'll go find a house with Craig or another realtor. Once you have that signed contract, so now we're going to convert your pre-approval from a pre-approval to a live mortgage application, where now we're going to ask for all the thousand of things that Kelson was mentioning earlier. We're going to want your bank statements. We're going to want your pay stubs. So definitely during this process, we want to make sure that you keep all the paper documents, or you can just have it electronically because you can just upload it once we ask for it. And if you do have any large deposits, we're going to ask, where did that come from? So if you get like a windfall of money somewhere, we're going to want to source it. Once we get everything, we will submit your loan to processing, and that's when we'll order the title work. Normally, the title company, usually the realtors, either refer one or we can refer one as well. And basically, what the title company does is they'll do a research to make sure that the person who is selling you the home, has the rights to sell you the home, make sure there's no type of liens or judgments against the home. And then once we get all that back, underwriting is going to review everything, and we're going to order appraisal because we want to make sure that your home appraises for how much you're buying it for. Now, if for some reason, if it underappraises, then that's when you will have to consult with your realtor to negotiate with the seller if they're going to lower it, or you will have to come out of pocket the difference if you still wanted to continue on with the purchase of the home. So once we get all that back, then that's when underwriting will review everything. That's when we'll get the final approval. And then that's when your loan goes to closing. And then the closers will make sure that all the closing costs and everything matches up And then that's when they'll send you the disclosures 3 days before you settle. So you can review everything, make sure everything looks good. And then that's when you'll go to settlement.
It seems like a lot, but it's worth it.
It is. And we'll guide you through. It's not like we'll just, just throw you out there. But no, we'll guide you through the whole process. And normally you'll be in contact with myself or your loan officer too. And we'll just let you know when it goes through the different stages.
So, of course, if you guys see like a big deposit into your accounts, it's going to be a red flag for you guys. But if somebody go to Chick-fil-A too many times or go to the grocery store, does that make a difference?
No. So we're not micromanaging that much. But no, we just want to make sure that, one, that you have the assets that you say that you have. And then two, just to make sure that, there's nothing extra coming in, or if there's like a big withdrawal, then we might have to ask, what is that about? But like the little stuff now.
Whew, okay.
I know. Go get your number 7, honey. Whatever it is over there at Chick-fil-A you like. Brittany, I want to ask you a question, but really quick, Latisha, I want to ask about how to choose a title company. How do you know that you're choosing the proper title company?
Normally, it's really good to get maybe a couple of quotes because we use like local ones. And like I said, realtors usually have some too that they can recommend. So it's always good to maybe get the one the realtor recommends, and then we can always provide one. And then you can ask the title company what their estimated fees will be. So then that way you can compare apples to apples and see which way you want to go.
Okay. Now, Brittany, back to this assistance fund program. Let's talk about that. Who oversees the funding and what type of assistance is actually there?
Okay, so the Department of Housing and Community Development administers the program by taking applications online through a portal and working with mortgage servicers. So that's who administers it. The type of assistance that's available, we have 3. We have the half grant, and what that is, that's a one-time payment. There's no lien recorded on property, and the maximum assistance that you can receive with that is $20,000. We have the half loan, and which can be combined with the half grant. And with that one, you have deferred payments for the life of your first mortgage, and there's a $40,000 max that you can receive with 0% interest. And then we have the Merlin Have Whole Home Grant, and this is the one for the critical home repairs. And with that one, again, it's a grant, so there's no lien recorded on property, and the maximum assistance that you can receive with that is $10,000.
Okay. And where can people find out more information about how to apply and get more information about the home assistance program?
So they can go to the website, Homeowner, let me get it together, homeownerassistancefund.maryland.gov. Homeownerassistance.maryland.gov is where the website that they can go to. I do have a couple of phone numbers to provide to them. I don't want to mix them up, so I'm going to just go over them really quick, okay? So if you are looking for housing counseling and legal services, they do have a hotline that you can call. That number is 877-462-7555. And if you need assistance with the online, with the application part of it, you can call the application support line. And that number is 833-676-0119. And you can reach them Monday through Friday between 8 a.m. to 7 p.m. I know a lot of homeowners may not have access to the internet, or they just feel more comfortable working with someone on the phone. So when I do go out in the community to give out this information, I do push both of them. If you can do it, that's online, that's great. But if you would like to, if you feel more comfortable speaking with a person, then you can definitely call.
And I want to piggyback off of Brittany too. Just keep in mind that when she says that they'll put a lien on the property, I have a lot of members too who are looking to maybe do a home equity loan, but if they might have taken advantage of the forbearance or had a loan modified. So you always want to make sure that if your current mortgage lender is going to put a lien on the home, then usually you will have to pay off that lien in order to do the home equities and everything like that, because a lot of lenders don't like going in third lien position. So I just want to make you aware of that as well.
Yeah, we need all this information, every single thing. We're writing it all down.
So Latisha, I have a question for you. I know a lot of, especially in the pandemic, a lot of people have their full-time jobs. They also got a side hustle as well to help, supplement income. When they are applying for a loan to buy a house, do you recommend they submit both incomes, or? No.
If you are part-time and if your income is part-time or variable, then normally they like to see you have that income for at least 2 years because we have to be able to show it that is consistent and you're on pace to continue to make the same amount.
Mm-hmm.
And if you do things underneath the tables, like if you get tip money and stuff like that, you would definitely have to report it, because if you're not reporting your tip income, we can't give you credit for it, because we can only give you credit for whatever you report to the IRS.
Okay.
Okay.
Because the pandemic definitely brought like a lot of more entrepreneurs, and they want to buy a home. So
yes, and then with that, we would need to see. Normally, it's the last 2 tax year tax returns, but we might be able to use 1 year if it's still in the same type of line of work that they were in initially.
mm-hmm.
But then they will be like more documentation for that as well.
Okay.
All right. Shout out to the Maryland Department of Housing and Community Development, along with APGFCU, for putting this phenomenal event together tonight. We're trying to build some Black wealth, get you into some homes, and if you have issues with homes, help you figure out the best solution for you. One thing that was confusing for me when I was buying a home is the different loan types. Like, we have the FHA, we have the conventional loan. I know I was just like, I don't even know which way to even go with this. Can we talk about what they are and what sometimes maybe the best option might be for other people? I know, Craig, I don't know. People ask you a lot about this. Latisha, I know you know front and back about this. So whoever wants to kind of jump in. Latisha, you want to go? Right, go ahead.
I can kind of start. So I do get asked that question a lot, like what type of loan products are out there and what's available for me. Most of my first-time home buyers, especially those that don't have the strongest credit profiles, do go with FHA. Like Latisha was speaking earlier, there are some loan officers out there or loan service and providers that can give you funding with as low as a 500 credit score. So those are like the most attractive for most first-time home buyers and a little bit credit challenge. However, in the market, and all realtors will probably agree with this, is that the conventional loan product is more attractive for sellers. And the main reason why is because the FHA loan is, FHA appraisal that has to happen. So the house needs to pass on certain things when it comes to the appraiser. Whereas the conventional can be a little bit more lax. And also with FHA appraisals stick with the house for 6 months. So if you happen to be in the process of buying a house that's FHA, and someone might have been trying to purchase the house before you, FHA as well, and they did an appraisal on it. Well, the appraisal they did before sticks with the house for 6 months. So some sellers don't necessarily like that. They like to have an opportunity to have a fresh appraisal every time they have a new buyer. So that's why conventional is a little bit more attractive. And conventionals do require you to have a little bit more stronger credit profile. So you do actually look better on paper when you're presenting an offer to a seller to purchase a home.
I'm going to jump in. Where does VA loans fit in?
So VA loans are for those who are veterans or even veteran spouses, and those are 100% financing. So we will have to get a copy of your certificate of eligibility. Want to make sure that you are eligible for VA financing. But then with those loans, you do not have to worry about a down payment requirement. And the guidelines are not as strict, but it is strict when it comes to like appraising the homes, because the VA has their own checklist, kind of like FHA loans, that they have to have their own checklist as well. And another 100% financing is USDA loans. So those are if you are looking in a rural area. The home itself have to be USDA eligible. So if you're looking like in Cecil County or something like that, they may qualify. And with those type of loans, you don't have to worry about down payment either. And they're backed by the government. And the rates are a little bit lower because it's a USDA loan.
Guess I'm moving to Cecil County.
Get that U-Haul truck, honey. I was talking to one of my girlfriends the other day, and she told me to ask this. She said, please make sure you ask this. So she's about to move with her boyfriend. They're trying to buy a house, right? And I guess her credit score is a little funny. I ain't asked, but she said she was going to be put on the deed. And she said, was it smart to be put on the deed and the home underneath his name? And I told her I didn't know, but I was going to ask. So what do you think?
I mean, if both of you it's like
Bishop. Ooh, this one sound good. She sat back and she was like, ooh.
If both names were going to be on the mortgage. So for mortgages, the way that it works, if like both of them were going to be on the mortgage, we will pull your credit report for both of them. And we will use the middle score for each. And then the lowest of the two scores is what determines the rates and everything like that. But we do have people who only want to have one on the mortgage. But then it's still kind of good to have your name on the deed, because that way you still have ownership of the home. We can't come after you to pay the mortgage, but if he doesn't pay the mortgage and it goes in foreclosure, then you're going to be responsible, or you're going to take, the hit too, and you'll lose the ownership of the home as well. And another thing you want to keep in mind too is if you ever were to sell the home, like if, let's say, if you were to break up, not putting that out there, but if you were to sell the home and if you're joint owners, then you might have to pay transfer taxes as well. And it's a little bit more to it than if, you were married, buying together.
Yeah, she's not married quite yet, but hopefully to be there soon.
Mhm.
We're gonna see. All right, so Brittany, let's take it back to you. So how do you become eligible when it comes to applying for the assistant fund program? Like, what do you have to have?
So so you must have experienced a reduction in income or increase in costs related directly or indirectly to COVID-19. You must be a Maryland resident. The homeowner must reside at the property as a primary residence, and evidence of deed must be provided. Also, if you are applying for the half grant, you must be equal to or below 100% of the area median income, and you can find that chart on the website. And if you are applying for the Maryland half loan or the whole home grant, you must be equal to or below 150% of the area median income. Also, the mortgage servicer or lender must participate in the program in order to receive mortgage assistance. And finally, the homeowner must provide evidence of housing instability, and that evidence can be mortgage or income documentation and a brief description of your COVID-19 hardship.
Okay. Latisha, I have a question for you, and I'm asking for a friend, right?
Okay.
Let's say if someone's ex-wife was a veteran, after they separate, can they still use that VA loan? Just asking for a friend.
Wait a minute.
Well, someone's ex-wife is the veteran,
Yes.
so they're not married to.
No more. The
Okay.
veteran anymore.
No. So only the veteran or a deceased veteran spouse can use the VA benefits, but not like an ex-wife or no. And then also, if you have a veteran and if they're have like a boyfriend or girlfriend, you really can't have someone who is not married on a VA loan either. It's only just the veteran or a veteran spouse on the VA loan.
Okay.
So at this point, just get a house when you get married together. Don't get on the deed. It's just less messy is best, right?
Yeah.
Right. Okay. Hey, Brittany girl.
Hey.
Okay, so you know what? Really, when it comes to buying a home, I think there's tons of different questions and people that are hopping on here. I know some people probably came halfway through. Can we take it back to some questions that we kind of asked before? And I think one of the biggest ones, of course, probably is credit score. What's the proper credit score? How can they even fix the credit score? I know we didn't talk about that, like some different programs that helps you. Oh, look, Brooklyn, look at that, right on time. What's a minimum credit score to be able to purchase a home? Let's talk about that.
So the minimum for conventional is 620. FHA, they can go down to 500. And the biggest difference is too with conventional financing, the closer you are to 620, the higher the rate will be. But FHA financing, the rates are not really tiered or skewed as close as you are to the lower of the credit score. So that's one of the benefits, like Craig was saying, that a lot of first-time home buyers who have like a credit score around the 620 or maybe lower would go with the FHA financial or FHA financing. And then also too, there are programs out there, like I know APGFCU, we offer like, one-on-one financial counseling where you can sit with someone in our financial education department. They'll go over your credit reports with you. They'll give you tools on what you need to do to either dispute or correct items. They'll go over budgeting, so that way they can help you budget for everything as well, so you can see how much disposable income you have too. Because like, we said earlier, we don't want you just to purchase the home, but we want you to keep it and still have financial wealth with increasing your assets and everything like that.
How does bankruptcy play into home ownership? Let's say that I filed bankruptcy 4 years ago, but I'm ready to buy a home now. Is there possible other different programs to help out with that as well?
It is. Bankruptcy does have waiting periods. So for conventional financing, it's usually like, I believe it's like 7 years for bankruptcy or foreclosure. For FHA, it might be 2 or 3 years. So there is a waiting period that after you file bankruptcy or after you do foreclosure or deed in lieu of foreclosure, there's a waiting period.
Craig, let's talk about contracts. Let's say they sign with Rebecca at another company, right? And they're like, I don't really like Rebecca. I want to go with Craig as my agent. Do you have to lock in with a contract or you can just kind of go as you please throughout the process?
Yeah, so you definitely need to lock into a contract. So in that scenario, like you mentioned, if you're working with, another agent and you want to switch over because the relationship just isn't working, you want to have that open dialogue with that real estate agent and say, you know what, things just aren't working out. I want to find some different representation, someone that more aligns to my needs, and you definitely want to terminate that contract. And the whole purpose of you having contracts is because you need to have someone that can technically legally represent you in the process, because without a contract, they technically will represent the seller for every house that they do show you.
And I heard not to have an agent that does both properties. I heard that wasn't good because they're kind of trying to please both sides. Is that true?
Yeah, so actually dual agency from one agent is actually illegal in Maryland. You can have dual agency within the same brokerage, but not from the same agent. So as an example, let's say, for instance, real estate company Next Step Realty, which is a company I'm with, 2 agents from Next Step can represent both parties in the transaction, but me as one single agent can represent both the seller and the buyer.
Okay.
That's good to know.
Mm-hmm. You can say something, Kelson? I'm sorry. I saw your lip move.
I forgot.
Or everything's fine. So during the pandemic, a lot of people did forbearances. Was that the smart move? Is that going to mess them up if they want to get out the property and go somewhere else? What would you say, Latisha?
Yes, initially, because a lot of people were doing the forbearances because, their lenders were offering it and they were like, hey, but they didn't realize that some companies reported it as late while you were doing the forbearance. Some companies took it, added to the end, but then put a second lien on the property as well. And then a lot of members were trying to, once they were in forbearance, then refinance at a lower rate. But then you couldn't do that. You would have to have come out of forbearance, pay everything that you deferred, and then have made payments for 3 months before you could refinance. So it did kind of hurt everybody, especially if you didn't really know, the detail.
I know when I was first buying a home, my first home, Craig, going back to the contracts, you had to also put in like I think it's called an earnest loan or earnest.
Yeah, earnest money deposit.
Right.
So it's often referred to as EMD, and this is pretty much a good faith deposit that you're making when you submit an offer on a property. It tells the seller that you are serious about buying the house. So this is some collateral that you do put up because the seller is taking their house off the market, so it's not being marketed to other potential buyers. And that's pretty much you telling them that you're serious about buying. You're going to go through the process of purchasing it, but that money will go towards your total down payment and closing once you get to the settlement table.
So if they don't accept my offer, do I get that $1,000 back, or I'm just SOL?
No. So if you said if they do or they don't.
If they don't accept my offer.
If they don't. So if they don't accept your offer, then that money will get refunded back to you.
Okay.
So everything's fine.
Yeah, we're good.
As long as the points come back, then everything's fine.
Yeah.
We want to remind you as you're watching, you can pop up some questions and we'll make sure we get that answered. Hey, Brittany, can we go back to you and talk about exactly what the Maryland mortgage program is over the Maryland Department of Housing?
Yes. So again, that is, I didn't mention, it's one of our flagship programs, but it helps the Maryland home buyers achieve their dream of home ownership through a range of programs. And there are a lot, and it provides 30-year fixed rate home loans to eligible home buyers purchasing in Maryland. And they have programs for if you have student debt. They have a product for that as well. So they offer a lot with the Maryland mortgage program.
Craig, what are some of the challenges you've seen with buying homes as of recently, say the last year or so?
I would say the biggest challenge I've seen is just the supply of homes being really low and not really meeting the demand for buyers. So it's been super, super competitive, and cash has really been king over the last year, I would say. I know you guys have probably all heard the stories of people just throwing, random numbers out there, paying way over the value of these properties. So I think that's been a big disadvantage for buyers that don't have a ton of cash or potentially using programs and things like that. So cash has really been king over the last year or so. But I will say that things have been slowing down a little bit. You're not going to see too many multiple offer situations where we were seeing before. So like earlier this year, if a really good house hit the market, you might have gotten 25 or 30 offers in on it, with some of them being $50,000, $75,000 over asking. That number has definitely come down. You're still having some people that are throwing, some cash out there for a house that they really, really want in a particular community. However, you're not seeing a ton of offers coming in on one particular house because the competitiveness and the demand is slowing down a little bit.
Okay. Dondra says, how long do you have to be working to purchase a home? That's good right there, because you have to have a certain amount of pay stubs. Who wants to hit this? Latisha? Oh, I think, are you muted or?
Uh-oh.
All right. Brittany or Craig, y'all want to take this?
Yeah, I can take that one. So typically most lenders want to see that you've been working.
So for working, we need a 2-year employment history. So, can you hear me?
You're going out.
Can you hear me?
Uh-huh. It's the rain or something outside, I think.
Yeah, so I would say typically they're looking for 2 years of employment history with no significant gaps. So even if you switch jobs, as long as you haven't had a gap in employment, you're normally good to go. And that's for those that are W-2 employed. Typically, if you're self-employed, they want to see 2 years.
Okay, there you go. Y'all are moving now.
Oh, we're moving now. Okay, go ahead. See, but now you moving and we can't hear you. Everything's fine.
And as long if you do switch jobs, if you're in the same, and if you do switch jobs, and if you're in the same line of work, you can hear me?
Mm-hmm. So if you switch jobs,
okay.
If you switch jobs and you're in the same line of work, then what had happened after?
Then you're good to go. But if you switch jobs and you're in a totally new line of work, then we do like to see you be there at least for a year. So that way we can see that you're making, the money, because we don't really have anything to compare it to. So that's why they always ask you like for the last 2 years of your W-2s and everything like that.
Okay.
Latisha, I'm going to ask this question. I think I already know it though, but for someone who may not know about the home buying process, when you do or you go for a pre-approval, is that a hard hit on your credit?
Yes. So if you do a pre-qualification where you were just talking, you're telling me about your situation and everything like that, then that's not a hard hit. But once you want to get pre-approved where we pull your credit, that will be considered a hard hit.
Okay. Yeah, because that always you're kind of scared to even do certain things. Like, dang, how many points is this going to go down or whatever it may be. Dondra says, what if you are self-employed? And we talked about this earlier too. Let's go back to that.
Okay. And then also let you know too, with the credit report, is as long as you're not pulling different types of pulls. So if you're not doing a mortgage pull and then you're going out trying to get a car and then a credit card, that would definitely drop your credit score. But if you're just doing a mortgage pull, and let's say if you do it like with a couple of lenders within normally the time period is like 14 to 30 days, then it wouldn't affect your credit score like it would if you were pulling different types of pull.
Okay.
And then as far as being self-employed, we do like to see at least 2 years of you being self-employed with your tax return. So 2 full years. So it'd be, if you're applying now, we will need to see your 2021 and 2020 tax returns.
Is there any leniency in the 2-year window?
There is, if you have what they're called like compensating factors. So if you have if you're doing a large down payment, that kind of offset it. And then also too, we do, because for W-2 income, we use your gross income. So that's before your taxes, deductions, and everything comes out. Whereas for self-employment, we use your net. So we use whatever, once you get your sales or your gross and you deduct. So if you deduct as much as you come in and you only report like 10,000 to the IRS, we're going to go off of that 10,000 number. We're not going to go off the number that you actually made, because you're deducting everything. So that's the only thing too, because, sometimes you deduct so you don't have to pay taxes. But if you know that you're going to be looking for a home, then you're going to have to start reporting income. So then that way we can count that.
Okay. Craig, I know that, some people may say you don't need a real estate agent because I can find a home myself and I'm just going to get up in there. But I know it's way more work than just showing a house, open up the lockbox and like, here you go. Let's talk about all the different things you do, all the steps to making sure someone gets in that home.
Yeah, so there's a lot of things that happen behind the scenes, a lot of the stress that real estate agents take on and we try to relieve from our clients. But a big part of the reason why you guys want to make sure that you have some representations, that you have someone that is knowledgeable when it comes to the contracts, because if you don't understand real estate law, you can really get yourself in a world of trouble and you can also lose a ton of money. So having someone represent you that actually knows the business, knows the contracts in and out is definitely going to be crucial. Some of the things that happen behind the scenes is, negotiation between the other agents, so you're representing a buyer, having a lot of long conversations with the listing side to try to negotiate and come up with something that's going to be a good fit for both parties. There's also negotiations when it comes to not just the offer in the beginning, but even if you happen to do an inspection on the house and there's some things that need to be repaired from the seller side, there's conversations that happen on the back end with that. The seller's agent, is involved a lot in the process on the sell side as far as getting the houses prepared for selling. So talking to different contractors, getting things lined up from photos, getting things put on the website, and a whole bunch of other things that kind of are happening behind the scenes that the clients don't necessarily see. Another thing that we're constantly doing is, communicating with the title company, making sure that the loan on the lending side is going to be taken care of, but then on the title side, making sure that the title is going to be free and clear and getting you all the way to the settlement table.
Okay, yeah, because as soon as I heard someone said it before, and I'm like, there's no way I could have did everything that my agent did. Like, I had so many questions, so many different things I didn't know, and I'm so happy that she was able to do that. And I'm sure, Craig, the same thing for you.
Yeah, I think a big part of it too, Persia, is really just creative solutions. I mean, having a real estate agent representing you, they have the knowledge and the experience and the contacts to really give you a peace of mind, because there's going to be some scenarios that come up, and having a creative, solution, which really comes from, experience and even their connections. Like I mentioned earlier, having, a realtor that's connected with other agents and contractors to get the job done is going to be important.
I agree 100%. We have less than 5 minutes left here. So I think that we should kind of backpedal and make sure we let people know exactly what steps they have to take to be a part of different programs, some resources that you might have in your companies, APGFCU, Maryland Department of Housing. Brittany, you want to start?
Sure. So for the HAF program, again, if you are in need of assistance due to COVID-19, you must show a decrease in income or increase in costs related to indirectly or directly to COVID-19 after January 21st of 2020. I don't think I said that the first time, so let me reiterate that. After January 21st of 2020, you must be a Maryland resident, and you must reside in that property as your primary residence and provide evidence of deed. Again, to apply for the HAF loan, you must be equal to or below 100% of the area median income. And for the grant, the whole home grant and the HAF loan, I said that wrong. You must be below or equal to 150% of the area median income. The mortgage servicer or lender must participate in the program to receive mortgage assistance. And you must also provide evidence of housing instability. So therefore, you can use income or mortgage documentation and also provide a brief description of your COVID-19 hardship.
Okay. What's that website?
Oh, the website is homeownerassistance.maryland.gov. Thank you for reminding me.
That's what we're here for. Craig.
I didn't hear you. Sorry.
Oh, sorry. I was like, Craig. The movie Friday for a second. What about you? Let's wrap it up with you. Just so people backpedal on how they can get in touch with you, some different resources you might want to add.
Yeah, so again, my name is Craig Powell. I'm the team lead for the Craig Powell team at Next Step Realty. You can reach me simply. I know a lot of people are on Instagram, so I'm on there. It's really easy, Craig the Realtor. I'm also on Facebook. at Craig Powell Jr. You can easily find me there. But again, like I was mentioning earlier, when you guys are selecting a real estate agent, it's going to be very important that you get someone that's going to align with what you require. Making sure that that person's going to be full-time is going to be really important because they're going to be available around the clock for you. You also want to ask them as far as, what does their support staff look like? Do they have an administrative team? Is there a showing agent? Because a lot of times most agents have multiple buyers. And if you guys all want to look at houses on the same day, are you going to miss out because that one particular agent isn't available to show your house? So do they have showing agents and other people that support them in that process? And then also just asking what's their experience. I think it's really important to have someone that's representing you that has knowledge of the areas that you're looking to buy in, because that's going to be important when you're assessing value, not only today, but for the long term.
Yes. Latisha, let's wrap it up with you.
And for us, you can go to apgfcu.com/mortgages. There we have financial calculators where you can actually put in information to see how much you may qualify for. We will ask you for your income, your debt. So you have to know how much your car payments and credit card minimum balances are. We also have, once you know how much you can afford, you can just run some scenarios on how much your monthly mortgage would be. And then also we do have a first-time home buyer program page on there as well. So it lists all of the programs that we offer, as well as the down payment and closing cost assistance too. And if you're looking for like financial education, where if you want to meet with someone or talk to someone, you can just go to apgfcu.com. And then we have like all type of information as far as setting up a one-on-one for someone to go over budgeting and everything like that as well.
And that is how you build Black wealth, the road to homeownership. Thank you guys for being our panelists tonight. We definitely appreciate all the information you provided. Special thanks to APGFCU and also the Merlin Department of Housing and Community Development for being our sponsors for tonight's event.
Now let's go spend this Black money.
Yes.
Y'all have a great night.
Good night.
Thank you.